Now we've heard about some of the private sector potential. Now we're going to, in terms of large companies in extractive industries or in investors, but now there are other investors. There are opportunities to generate resources from other private sector entities. So I'm going to pass the word to Fabian Huwler from Credit Suisse, who's going to talk about a study that was done, and then we're going to give a few case studies of different investment options. Thank you.
Yeah, that's not a problem. I'll just talk about it anyway. So, I'm Fabian Huwler with Credit Suisse. For those of you who don't know Credit Suisse is a global financial services provider. We have offices in over 50 countries and are headquartered in Switzerland. And now you may ask yourself the question, why is the banking sector represented here? The question is very simple. Nature does not only, the protection of nature does not only cost money, but if structured in the right way, it can also bring some financial revenues to investors. And that's why we're interested in the topic and have spent some considerable amount of time trying to evaluate and assess the opportunities that would come from, again, mechanisms that first of all protect nature, but also provide some revenue streams that we can give back to our investors. In order to make that case more clearly, we have embarked on a research project with WWF and McKinsey, and we published a report in January of this year that really looked at three things to try to come up with a number of how big the global demand for conservation funding is, what the availability of capital is that currently goes into conservation, and how we can close that gap of funding that currently exists. And we don't have the charts here now, but basically the figures are as follows. We have, at this stage, about $50 billion that are spent on the global protection of nature. There are a number of studies out there that have different estimates, but the average assumption is $50 billion. Of those $50 billion, around 80% comes from government and philanthropy. USD, yeah. The remaining 20% comes from the private sector. So that's the money that goes into that currently goes into the conservation of nature. On the other hand, what is required to protect the most world important ecosystems, there are estimates out there of about 100 to 200 billion US dollars. So what we see here is that there is a great mismatch of what is currently going into the sector and what is needed to protect the most important places. So if we look at those figures, we all know that given the budget situation in most developed countries and also developing countries, government spending will not massively increase. And the same thing accounts for philanthropy. There are global statistics, and philanthropy has been flat up a couple of years. The result and the finding is fairly simple. If we want to close that funding gap, we have to tap the private sector investment solutions. And the good news is it can be done. It is manageable. If you look at total investment that is done by the private sector in a year, it would mean that only 1% of the globally new and reinvested capital would have to be allocated to conservation, and we could close that funding gap. So in theory, it's manageable. In practice, it's more difficult. There are a number of problems both on the structuring side as well as on the project development side that make it more difficult to come up with good cases where, again, investments can be made that have a positive impact on the environment and provide returns to investors. I guess, in terms of innovative financing mechanisms, what is important to understand is that there are a number of mechanisms out there. Great. Again, here's the chart again on the funding mechanism. I've already talked about them. If you look at the mechanisms that are out there, on the upper right-hand side, you see that money goes into the conservation sector through government budgets and philanthropy. That's not what we're particularly interested in. Mostly that's grants. We're interested in the bottom part, which is money that comes from retail investors, from more wealthy investors, and from new sources like crowdfunding. All those sources of money go into investment structures. There are a number of more established structures like trust funds. There are more innovative structures like green bonds. I'm not sure whether you're familiar with them. They're basically normal bonds that are just issued under the terms that any issuer would do them otherwise as well, with the use of proceeds used for green projects. And then obviously there are traditional forms like equity investments, project finance that you can do in the conservation sector as well. So we're looking at, again, investment structures that activate cash flows, and that's the important point. Most of the projects that I guess you're familiar with, they work via grants, and the money is spent, and then after that you have a positive impact, but you don't produce a financial return. We're looking at projects that can produce a financial return, and how can that be done? There are more established structures like user fees for national parks that bring some revenues back. There are, hunting fees. There are compensation payments that many of you are familiar with, either from, biodiversity offsets or from many other offsets that we have to make. And there are more innovative mechanisms developed, like nutrient trading in the US, like, again, some biodiversity credit trading schemes, like in Australia. Something like environmental impact bonds, the equivalent to social impact bonds. There are a couple of new structures out there, not tested at a larger scale, but innovative as pilot projects. What all those activation mechanisms for cash flows allow in the end is that we can conserve the ecosystem, whether it's oceans, forests, or land. And what is very important, if you look at that chart, is that part of the money will go back to investors as a financial return, but part of the money will remain with you, the project developers, to sustain the environment. And I guess that's the framework that, again, explains how such private sector investments can make sense and provide a return to the investor. On the final slide, I want to tell you that indeed there is hope, and there is, from all we know, there is interest from private investors to invest into conservation. There will always be the donor component, which is the top part, that will have a conservation impact without any financial return. But there will be situations where you can structure a project in a way that it will either at least preserve the wealth of the investors, which means that they will put some money into a project and they at least expect to get their money back, inflation adjusted, or ideally with a really small return of 1 or 2%. And then there will be few opportunities, not all of the projects, where you can really make bigger returns, structured in a way that you have multiple revenue streams, examples like you produce sustainable commodities that are certified according to fair trade standards. You couple this business model, for example, with a project that develops REDD+ credits and carbon credits, and you bundle that into a financial product that in the end, again, provides some positive impact for the environment, but also return to the investor. At this stage, what we and I guess some of our competitors are interested in is really the two bottom categories. Opportunities that provide some wealth preservation and opportunities that really seek some major financial returns.
Thank you, Fabian.